Reserve Bank of India announced the Monetary Policy Committee decisions keeping the repo rate unchanged for 6.5% for the 8th consecutive time. This decision aims to ensure economic stability amidst global uncertainty and domestic inflation concerns. Borrowers will continue to face high interest rates on loans as the repo rate remains unchanged, impacting existing loans. While borrowing costs are likely to increase, banks may offer higher interest rates on fixed deposits to attract more depositors. Now coming to inflation. The RBI maintained its inflation projection for financial year 25 at 4.5%, with quarterly estimates for quarter 1 at 4.9%, quarter 2 at 3.8%, quarter 3 at 4.6%, and quarter 4 at 4.5%. This decision comes as food inflation remains a concern, outweighing benefits from the core disinflation and the fuel deflation, with urban and rural areas experiencing increases in April, leading to national food inflation rise of 0.74%. Now, despite this, retail inflation hit an 11-month low of 4.83% in April 2024, within the RBI's tolerance band of 2 to 6%. The MPC meeting will closely monitor food inflation, particularly with anticipated normal monsoon, as inflation in pulses and vegetables remains in double digit, with vegetable prices rising this summer. Now coming to the GDP forecast for financial year 25. The RBI has revised its growth forecast for the fiscal year to 7.2%, up from 7%, with quarterly estimates slightly higher than the previous projections. The RBI has projected real GDP for financial year 25, quarter 1 at 7.3%, quarter 2 at 7.2%, quarter 3 at 7.3%, and quarter 4 at 7.2%. This upward revision is done as the domestic economic activity has remained resilient, with manufacturing and services sector showing strength and private consumption and investment activity gaining traction. Now coming to the benefits of changes made in this MPC. The stock market responded positively to the GDP forecast hike, with the Sensex rising over 1% or over 800 points to 75,946 after the policy announcement. The RBI's latest monetary policy decisions also benefits MSMEs by maintaining the repo rate and projecting robust GDP growth rate. This reflects strong domestic demand and favorable economic conditions, offering MSMEs expanded market opportunities and financial stability. Additionally, the integration of UPI Lite into the e-mandate framework for small value transactions will boost digital payments, reducing transaction cost and enhancing operational efficiency for MSMEs. Overall, the RBI's policy updates provides a stable and supportive outlook for MSMEs and NBFCs, reinforcing a balanced and resilient economic environment. With strong growth and high uncertainties, the RBI might not immediately announce any changes for policy easing. However, as inflation settles closer to the target, there may be room for easing, with a potential rate cut expected in October. Having said that, this is Aditi Priya signing off.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.